Okay, so today we're going to be looking at determining control. And before we dive into this, I just want to go over what I mean by this and take a step back and look at course 1, 2, and 3 and understand, right, that's technical analysis. Okay, so we're identifying the support and resistance on our chart. We're looking at DBS and SSR zones. We're layering in Fibonacci, Ichimoku for confluence. So now we have this incredible storyboard, but as we've talked about in liquidity theory, we want to see what's going on under the hood, right? And so as we advance into this course and we look at things like high block capital and we start to incorporate this platform into our trading setups, we're going to be looking at a lot of the things in this lesson plan of determining control. And I want to give you guys a primer to what we're going to be getting into. So we've talked about this conversation of buyers and sellers, right? We want to see these inflection points where one party is getting exhausted and who's off sides. You're going to hear us talk about who's off sides a lot. And that's a big component of determining control. So let's get right into it and let's just go over some of the variables that Zorn and I like to watch to kind of get a sense of who's in control and who's possibly offsides. And so we're going to be going through these 4 variables in different lesson plans, but this video is to give you a bit of a primer and to make you think about the market participant psychology and who's in control or who's offsides. And so there are a lot of different variables you can watch. These 4 are something that I find very useful for me when I'm looking at my trading setups and trying to identify market participant psychology. And I think Zorn would agree with that as well. So we have funding intervals. And if you recall in our BitMEX overview of the interface, we looked at the funding component. We're going to be diving deeper into that and explaining what it is, giving you a refresher on that. But then looking at the intervals, the daily funding rate, and how that is in relation to price, and how that's going to help us to determine who's in control, who's potentially offsides, right? It's all about the buyers and sellers, longs and shorts in the market. Open interest, we've gone over briefly, and we're going to dive into that. And this is going to help us as we look at it in relation to price. And if you recall, we went over volume and price. Open interest and price is going to be something similar. It's going to help us to gauge the trend, strength of a trend, possible reversals. Cumulative delta, this is going to be looking at our longs and shorts in the market through market buys and market sells. And we're going to be looking at this to see if we can spot imbalances. Maybe the longs are getting too aggressive. Maybe the shorts or sellers are getting too aggressive, right? And you start to pair that up with your TA, or technical analysis. And again, this is something to look forward to in the rest of this liquidity theory, but start to see how these variables are pieces of the puzzle that we're trying to put together to figure out that key component of who's in control and who's offsides. And futures basis, this is going to be a unique way to look at things where we know that the spot price and the futures price have a discrepancy. And at times the futures, the future price of the asset at a specific point in time is going to be a lot higher than the spot price. And there's times where the futures price is actually lower than the spot price. And so we're going to be going over instances and things like contango and backwardation, and I'm going to show you why this could help us determine inflection points, who's in control, and again, who's offsides. So there's a lot to look forward to in this determining control section. I'm going to leave it at that, and we come back, we're going to pick up on funding intervals.